Hello, my name is Sasha Struthers. I'm an employment and landlord tenant attorney here in Los Angeles, and today I'm doing a quick video on just being organized when it comes to looking good for the bank. I've had to deal with this year over year for several years, but every year when you have a mortgage already existing on a building, that's an apartment, fourplex even, or a warehouse, the bank asks you for documents to just basically verify that you are good to pay this loan indefinitely until the mortgage ends. The documents that commonly ask for are the operating statement for the prior year. Operating statement is also known as the profit and loss statement, which is the income you bring in minus all the expenses associated with the property. Then you get your profit or your loss, which is the cash flow of the building. Then they will ask you for the operating statement, also known as P&L, year to date, assuming that they ask you, like January on of the next year. They will also want your personal tax return, any business tax returns for businesses that are guarantors on the loan. They will want your current rent roll, and they will want your real estate schedule and your personal financial statement. The real estate schedule and the personal financial statement are often forms a bank will provide to you, but you can use the same forms for a different bank, or you can create your own. In the sense, the real estate schedule is just that. It's a sheet that contains all the property addresses that you own, the date you purchased them, the amount you purchased them for, your ownership interest in that property, if they're an investment property or not, so yes or no question to that. If they will also include your estimated fair market value for the property at the time that you're doing this real estate schedule, the mortgage balance left on it, the monthly mortgage statement, the mortgage interest rate, and the mortgage or the monthly rent on the property. Not necessarily in that order. You want to make it make sense. But those are the main components of a real estate schedule. A personal financial statement, again, is a form that most banks have, but if you already fill out a personal financial statement, other banks will usually accept that one. I suggest whiting out a bank logo if you use another bank's PFS. But that also is a similar thing, not so much the real estate schedule, but it's a screenshot of your financial situation at the time you're filling it out. So, how much money you're bringing in, how much money are any of your bank accounts, for you personally or for the business bank accounts that are a guarantor on the loan. It'll also ask you what your personal financial obligations are monthly, so like your mortgage, your car payment, credit card payments, things like that. And then it'll have, some questions, usually about a criminal background, if you are a party to any lawsuits, and if you are a co-signer or a guarantor on any other loans. And those are the main documents that you turn over year over year with the bank, so that they can kind of verify that you're still good to pay this mortgage. Now, when you go to refinance a property, then the banks tend to ask for slightly more. They will usually ask for anywhere from 2 to 3 years of your back, personal taxes, and business tax returns. And they'll ask for usually 2 to 3 years of operating statements. They will ask for usually bank statements, insurance policies. They will also ask for maybe property tax bills. If the property is held in some sort of business entity, then the operating agreement or bylaws, and the articles of incorporation or organization, if it's like an LLC. And it tends to be the main documents they ask for by like a refinance, assuming that it's going to be another institution besides the current mortgage holder that's going to be refinancing it. But I made a video about this, whether you are unsophisticated or sophisticated, whether it's your first property or I know like your 50th property. It is very, very key to be organized because it looks very good to the bank when you have all of your documents together and you're quite responsive to things. And I've managed buildings myself and I've worked with owners, and organization for some reason is just not their thing. I think to me it's very intuitive. I'm a very organized person, but for other people it tends to be an uphill battle. But I stress this and I made it a video because I want everyone to have their documents together, because it's not like a one-time requirement, it's an ongoing thing. So if you have a mortgage on an apartment or like a warehouse, every year it's not a surprise. Every year they're gonna ask you for your paperwork. And if you don't know where it's at and it's scattered all over the place, that's gonna be problematic and it makes you look bad. And if you're going to refinance, especially if you're going to refinance and you're trying to cash out, which right now is somewhat difficult given the pandemic, banks have lowered their LTVs, their loan to values, which means they aren't necessarily allowing you to max out the equity you have in a property. And so if you're trying to get cash out, it is important that you have your paperwork together and you can turn it over. Otherwise, it makes the loan approval process that much more tedious and longer. So, should you have any questions about this for some reason, or you have, any queries about property management or asset management in general, by all means, feel free to reach out to me and we can discuss, ways to improve your real estate portfolio and, overall management of the portfolio. Other than that, I wish everybody good luck and thank you.